the thing that's the most interesting to me is how people are going to be using these AI tools for trading.
Okay.
And we're not seeing that much out there yet, right? There's no like killer system or killer example, except for except for one thing where the system is monitoring, the AI is monitoring your screen and then can interact with you. Now, I think I've been going about this all wrong. You let me know what you think. I think I've
Okay.
been going about this all wrong. What I was thinking is like, okay, we set up these AI systems, and then it will be able to look at my screen and then uh, see the chart and then see the indicators, make decisions on my behalf, and then execute the trade at a broker, which to me seems like how someone in the 1950s thought about the year 2020. It's like, okay, I get the idea, but the idea isn't that we're going to make like a huge phone. The idea is that we're going to have a phone that's like very different and allows you to do so many things you might not even use it as a phone anymore. Like the future is different. And so it started me thinking of this idea of the AI trading that we'll be doing will be AI enhanced, that we are AI assisted in what we're doing, that the information that we're relying on that we wouldn't normally be able to get, that we can get it, right? So for example, if I wanted to get a Bloomberg terminal in order to get more granular information or access to information within markets or different companies, well, I can't get that. I'm not going to pay $24,000 a year for a Bloomberg terminal. Not going to happen. But AI would be able to aggregate information that I find to be relevant and then display that to me in my own custom terminal, my own Tom Bloomberg terminal
Hmm.
that I can then make decisions on. And when I see that, I go, well, that actually makes more sense with how people want to operate. Like people don't want to not trade themselves; they want to just be better at it. Um, the system that the the system that can speak in natural language, if it's there commenting on what I'm doing. Hey, I notice that you're emotional right now because your Garmin watch is sending me your heart rate and is letting me that you're a little bit you might be revenge trading right now, and I could see you through the webcam. Maybe you want to calm down, and maybe there's like a chorus of these people and voices of my loved ones telling me hey, how I might want to trade.
Hmm.
Like the more I think about that, I go, that's the world I want to live in, not
Connect
just sit
yourself to
around.
a blood pressure monitor as well. I think I saw that one on Twitter recently. Somebody was trying to
Yeah,
day trade with a blood pressure monitor.
yeah.
Yep.
So it's like these are the types of things I think I want to see AI develop. And I was
Yeah.
just curious about your point of view on these things.
Sure. Let me unpack because I have a big opinion on this one. So I started studying valuation in roughly 2012, 2013, because I think my introduction to trading was really the Warren Buffett valuation style. Now, granted, I'm not as big of a value investor these days as I used to be because value typically underperforms growth like significantly. So I keep very big positions in growth companies, but I like to see opportunities where value might be in play, where there's a good opportunity to buy a high quality company that has a very rich history of high corporate earnings, and their expectation for earnings in the future are really high. So it's really easy to analyze these companies from a financial perspective because the data, the fundamental data, is now readily available to everybody. When Warren Buffett got his start in the 1940s and 50s, nobody really looked at this kind of stuff. People were just kind of instinctively deciding which companies they wanted to buy, or their family friends said buy the Nifty 50. So they all bought the Nifty 50, and they all kind of just sort of bought random companies, or maybe they got a pension with the employer that they had at the time, right? But we've disseminated more fundamental data now over the last 20 years than ever before in history. There's incredible number crunching at play. You've got, platforms like Quandl that give you all kinds of interesting fundamental historical data, bid ask data, tick data. There's everything. Anything numerical is fairly easy to get access to now. And that's not really where the opportunity is. This technology gives us the ability to interpret the story about a company, the narrative of a company. And this is what's fascinating to me. I would be interested in using this technology to take the fundamental data I know I'm already aware of. I've already rank prioritized all these companies I've screened for that are potentially undervalued. They have high intrinsic value, but a low market price. They are owned by other super investors, like the Berkshire Hathaways of the world. Maybe Bill Ackman owns a piece. Maybe Michael Burry owns a piece. There's a whole list of super investors out there that are required to report their holdings on 13F filings every 45 days after the end of the quarter. So I follow a lot of that because I want to know what the big guys are doing. But then once you're presented with this company, then it's a question of who is this company? What is it that they do? And what do they do well, right? And what does ownership say about their company? How does ownership behave, right? What's the management style? What is their vision for the future of the company? And you get to this point, especially as an analyst, where you don't have time in the day to analyze 75 different companies and go deeply into the history of each one, understand what they've said about the company in the past and what they're saying about the company today. Maybe even analyze, any public interviews that executives have done. What have they said on earnings calls that would contribute? So I think that there is a really good opportunity to use these models to crawl and scrape all those interviews, all those conversations, anything that's been publicly stated by executives, anything that's been publicly stated by analysts or critics of the company, as well as all of the 10Qs and 10Ks of those companies, compile that down into, a trained model in GPT-5. And now I can tell a bigger story about this actual company. Now I want to know, what's the management vision? What's their strategic objectives? How is this going to impact revenue in the future? What's the likelihood that these changes are going to be meaningful in the future? Those types of things. And I saw a study about this done recently on the GPT-4 models, not even O or 5 that's upcoming. And they were able to make a slight increase in alpha by selecting companies that had been trained on a model by looking at this type of thing, like really trying to unleash GPT as an analyst to determine if future earnings were going to improve. And their prompting was the biggest part of this. Like how they taught the model to look at certain things was a big part of it. So that to me is the opportunity. Like, what's the narrative? It's not the numbers. Like, everybody can do the number crunching. That's the easy stuff. It's the narrative. It's the story. It's the, can you read between the lines and can you do it at scale? Like, let's now research all 75 of these companies in the next hour and get back which one seems to have the highest likelihood of higher earnings in the future.
So I love that idea of like big data for the small guy.
Yeah.
I just have one qualm with that, which is you can imagine that a system like that, if it's running well, I guess maybe I'm making the efficient market hypothesis mistake, but let's say I'm not. If a system like that finds a discrepancy between the intrinsic value and the trading value, the spot price, does that get then efficiency marketed out of the market, and then your advantage is gone within 1 quarter?
Well, I mean, so EMH is a tough argument as well. I'm not particularly convinced that EMH is 100% correct all of the time. I do
Yeah.
think that markets are efficient. People are smart. They tend to look to the future to make choices about what's happening in the present. So much of what you see in price is priced in right now. They've already accounted for these things. But I'm not even talking about getting the model to determine if there's a particular gap between intrinsic value and the current market price. That can be done statistically, numerically, through discounted cash flow analysis or dividend discount models. All of that stuff, even that data, is readily available on other platforms like Simply Wall Street, for example. It's not the numerical data I'm after. I'm after whether or not the narrative of the company,
I
interpreted
see.
by a model, can tell us anything about the future of the company. Because gleaning that nuance, that contextual information is more difficult than numerical data. It's always been the tougher part of financial analysis, is getting through the context of all this information from an NLP perspective.
You know what? You're totally right. I was subscribed to a service at one point where when a new CEO started at a company, this system would tell me what other companies the CEO was part of and what happened when they were there and how long they were there and all that sort of thing to give you an idea of, well, is this a good pick for a CEO?
Yeah. Is this, yeah.
Um, but I was like bored out of my mind. I to go and read all that information. Just tell me if the system could just tell me, hey, yeah, this is, then it's likely, 67% probability that the stock will go up and that the narrative will change to the positive.
Hmm.
That would be amazing.
Yeah.
Huh. The the feedback mechanism between the okay, let me just start it this way. The Most people don't realize that technical analysis has existed for freaking a long time,
Hmm.
and merchant classes in other civilizations who had some measure of technical analysis were almost like fortune tellers, right?
Right.
Because what we consider to be a bull flag breakout, can you imagine if you're doing that against a bunch of other people, the most other people who have no idea that that's even a thing to
Hmm.
even check? And so they'd be able to be able to determine that the price of wheat was low now, but that it was likely to explode, and so they could buy wheat now and then sell it later on in different location, blah blah blah. And I always thought that was like super fascinating that they're there on using their abacuses and papyrus in order to do technical analysis in their population and then figure out what's going to happen. And TA has become more accessible to the retail trader over the last years, obviously because of technology and the internet. It's provided us with the ability to actually do technical analysis without having to go through all the rigmarole of like plotting it yourself.
Hmm.
So then I go, okay, what is it that people are using now that institutions or different players are using now that retail traders are just not thinking about? Like we're just not accessing that information. What's the TA for the future? And it has to be data like what you're talking about. When I think about the aggregation of data and the richness that can come out from an AI, from the right questions, the right framework for how to think about what to extract from from that data, I think it's a no brainer that that's going to be like the next big thing. Plus, you don't get any. There's no bottom to that well. The more data that you get, the more
Right.
participants that are participating inside of it, and uh, the more data will then be created, which can then be mined for more. And then you could even have the AI systems themselves introducing
New ideas
um,
of what to
e-
incorporate.
exactly. And
Yeah.
so it really explodes to all to anything.
Yeah, I mean, I'm thinking like if you're looking at an e-commerce company, you could crawl the history of reviews as an indicator of how people's sentiment about those products have changed over time. Particularly if you can connect that to the main product line of the company, right? Like how often do companies sell like 9,000 different things, but the thing that really matters, the real revenue driver is this one thing. Well, I can now monitor for reviews around that product and determine where sentiment has changed over time. What's the likelihood that they're going to see higher earnings just because the consumer sentiment is big, right?
Hmm.
We already know that people are crawling Reddit. What about reviewing all of the employee reports on platforms there's a one where you can leave a review about your company.
Glassdoor.
Glassdoor, thank you. So imagine crawling all the Glassdoor reviews to get a sense of whether or not employees actually appreciate the management style and then
Hmm.
incorporating that into the narrative as well. That type of rich contextual knowledge does not show up on TradingView charts. That's the kind of stuff that is exogenous data that we care about, right? That tells the story about the existing company. And that can create a feedback loop to reinforce your trading decisions about whether or not this is the right company to invest in.